First, I'd like to thank you for coming to learn more about the Heatlh Coverage Tax Credit, or HCTC, and how it can help you. My name is Lauren, and I'm pleased to be here with you today on behalf of the HCTC program and would like to provide you with answers to these questions during the presentation. First, what is the HCTC? Which will include a quick overview of the HCTC as well as the monthly and yearly tax credit options. Next, am I eligible? What type of health plan do I need? And are my family members eligible? Please take advantage of our HCTC resources, including this presentation, our online tutorial, and our website, www.irs.gov/HCTC. If you still have any questions, we'll also provide you with the contact information for the HCTC program at the end of this presentation. Please feel free to reach out to us for any additional clarification or to request support. To start, let's talk about the Heatlh Coverage Tax Credit, what it is, and why we're here today. The HCTC is a valuable tax credit that's here to help you pay for your health insurance. It's a federally funded program administered by the Internal Revenue Service, and it pays 72.5% of your monthly health insurance premiums, meaning you pay only 27.5%. A tax credit like the HCTC can be a huge help to your monthly budget and help you maintain health coverage. In order to receive the tax credit, 1, you must be eligible, and 2, your health plan must qualify. Now, we'll talk about what it means to be eligible and have qualified coverage, but first, let's talk about how the HCTC makes health insurance premiums more affordable for you and your family. There are 2 ways you can receive the HCTC. You can enroll in the monthly HCTC or claim the tax credit at the end of the year. So, like most other tax credits, you can claim the HCTC on your federal income tax return. Pay 100% of your monthly premium directly to your qualified health plan each month, and be sure to keep copies of your insurance bills and records of all payments. Then, submit IRS Form 8885 with supporting documents with your federal income tax return. You can claim the HCTC for any months during which you were eligible and making full payments directly to your qualified health plan. Once the IRS processes your tax forms and determines that you're eligible, you'll receive 72.5% of your premium payments as either a tax credit or as a refund. Now, what makes the HCTC unique is that you can also receive the 72.5% credit each month as your premiums are due. To receive the tax credit on a monthly basis, you should use the HCTC eligibility kit you receive in the mail to determine if you're eligible to register for the monthly HCTC. You can then complete the HCTC monthly registration form that's included in the kit. Once we've received your registration form along with the required supporting documents, we'll enroll you in the monthly HCTC program. From there, we'll send you an invoice for 27.5% of your monthly health insurance premium at the beginning of each month. After you pay that amount to the HCTC program, we'll add on the 72.5% tax credit and send the full payment directly to your health plan. Now, it's very important that your payment is received by the HCTC program by the due date so we can match the 72.5% tax credit and send the full payment to your health plan. Like any monthly bill, your on-time payment to the HCTC is a must to stay in the program. Again, in order to receive the HCTC, you must be eligible and have qualified coverage. Let's talk more about who's eligible for the program. So this first part is about you and whether or not you are eligible to receive the tax credit. HCTC candidates must fall into one of 2 categories. The first group of candidates includes people who've experienced a pension bankruptcy and are now getting their pension payments from the Pension Benefit Guaranty Corporation, or PBGC. PBGC payees are eligible for the HCTC if they're 55 years old or older. Now, most of you will fall into the second category of people who recently worked for a company like Hostess that has been trade certified by the U.S. Department of Labor. So if you receive an income supplement called a Trade Readjustment Allowance, or TRA, or you've been deemed eligible for TRA but are still on unemployment insurance, you may qualify for the HCTC as being a TAA recipient. TAA recipients must also be attending TAA-approved training or have a waiver. Reemployment TAA recipients are also eligible to receive the HCTC. Shortly after the state notifies us of your eligibility, you'll receive the HCTC eligibility kit in the mail. Finally, your family members, a spouse or any dependents you may have, are also eligible to receive the tax credit. Now, regardless of which category you fall into, there are a number of other guidelines you must meet to enroll. For instance, you can't be enrolled in another federal health benefit, such as Medicare, Medicaid, or TRICARE, and also receive the HCTC. Also, you can't be claimed as a dependent on someone else's federal income tax return, but your qualified family members must be a spouse or claimed as a dependent on your federal income tax return. So again, you and your family members are eligible if you're a PBGC payee or if you receive trade benefits from your state and meet those other general guidelines. But that's only the first part of it. You must also have health insurance that qualifies. All right, I'd like to take a second to make a quick clarification. The HCTC does not provide health insurance. It helps you pay for health insurance premiums to help you stay covered. You either need to already have coverage that qualifies or obtain it. Now, the most common types of health insurance that qualify for the tax credit are a COBRA plan, a health plan certified by your state's Department of Insurance, or coverage through your spouse. COBRA is continuation of your job-based health insurance and is the health plan we see most often in the HCTC. In order to participate in the HCTC with COBRA insurance, you or your spouse must be paying more than 50% of the monthly premium. A state-qualified health plan is a health plan certified by a state's Department of Insurance as meeting certain consumer protection requirements. State-qualified health plans are often a good option for people who were not offered COBRA or who didn't enroll in COBRA during their enrollment period. Visit irs.gov/HCTC and click on Quick Resources for a list of qualified health plans in your state. There, you can also find contact information for your state-qualified health plan, which you can use to learn more about their enrollment process, costs, and coverage. Finally, if you're covered or can be covered by your spouse's health insurance, where you and your spouse are responsible for more than 50% of the monthly premium and pay with after-tax dollars, you can participate in the HCTC. Many people ask how they'd know if they were paying more than 50%. If your spouse calls their HR or benefits department, they can ask what the total cost of coverage is for their health plan with you on it. As long as you and your spouse are contributing more than the employer is, you can claim the HCTC. Now, it's important to note that you cannot enroll in the monthly HCTC with spousal coverage. In this situation, you must claim the HCTC on your federal income tax return. On rare occasions, certain other plans may qualify for the HCTC. For more information about these plans, please go to www.irs.gov and search for HCTC Qualified Health Plan Requirements. Okay, so we've covered a lot so far. We've talked about what the HCTC is, how you may be eligible, and what types of health plans qualify. Are there any questions at this point?
Actually, I've got a question. I used to work at Hostess, and I'm enrolling in TAA. If I think I'm eligible for HCTC, should I call and tell you? Or how will the HCTC even know if I'm eligible?
Oh, great question. The HCTC program itself doesn't determine HCTC eligibility. So once you've enrolled in training and qualified for that trade readjustment allowance, your state will determine if you're HCTC eligible. If you are, they'll send your information over to us, so there's no need to call. Once we have your information in our system, we'll automatically send you an HCTC eligibility kit in the mail. So when you see a big envelope from the IRS show up in your mailbox, don't panic. That's your HCTC eligibility kit, and it has all the information you need to know to get enrolled. Great question. Thanks for asking. Well, if there are no other questions at this time, we'll move on and discuss how the HCTC makes healthcare more affordable for your family members as well. The HCTC pays 72.5% of qualified health insurance premiums making health insurance more affordable for you and your family. It's important to know that you can enroll your family members with you in the HCTC program. Also, if you're canceled from the HCTC program due to enrollment in Medicare, death, or divorce, your family members can continue to receive the HCTC for up to 24 months starting with the month of the event or until January 1st, 2014, whichever comes first. So, for instance, if you're a PBGC payee and enrolled in Medicare when you turn 65, you're no longer eligible for the HCTC. However, you may be able to claim the HCTC for your family members for up to 24 months from the month you turn 65 or until January 1st, 2014, whichever comes first. If you or a family member is in this situation and would like to receive continued coverage, please call the HCTC Customer Contact Center using the number provided at the end of this presentation, or visit www.irs.gov/HCTC for information on how to enroll. Let's take a quick look at the scenario on the screen. Being able to pay only 27.5% of my monthly insurance premium would be a big help to my budget. I'm interested in signing up to receive the monthly HCTC. What should I do? It's important to know that enrolling in the monthly program typically takes between 4 and 6 weeks. The first part is making sure you're receiving TAA or PBGC benefits, which we discussed earlier in the presentation. Second, you must have or obtain health coverage that qualifies for the tax credit. You cannot participate in the HCTC if you're uninsured or if the type of coverage you have doesn't qualify. Once you have qualified coverage, make a copy of your health insurance bill to send in with your registration. The third step is completing the HCTC monthly registration form. This form can be found in your HCTC eligibility kit that you receive in the mail, or you can call the HCTC Customer Contact Center and have one sent to you. While enrolling in the monthly HCTC, it's important to continue making full 100% payments directly to your health plan. You can claim the HCTC for these months on your federal income tax return. You'll need to keep a copy of your health insurance bill and proof of payment, and then submit IRS Form 8885 along with these supporting documents on your federal income tax return. Finally, once you've submitted the registration form with all required supporting documents, you'll be enrolled in the program and you'll receive a welcome letter with your first invoice. Once enrolled, it's important that you make timely payments to the HCTC in order for us to add the 72.5% credit and send the full payment to your health plan on time. We appreciate you taking the time to learn more about the Health Coverage Tax Credit today. If you have any additional questions, please visit the HCTC website at www.irs.gov/HCTC or call the Customer Contact Center at 866-628-HCTC. For those with a hearing impairment, call 866-626-4282. Thank you and have a great day.